Okay, so let's start with the webinar. Hello.
Yes, ma'am. Can we start?
Yes, sir. So actually, there seems to be a problem in the camera. I hope it's okay if I keep it off for now.
From your side or from my side?
Yes, sir. Yours is working fine.
Okay, no issue.
Okay, so let's start with today's webinar. Growth is never by mere chance. It is the result of forces working together. Namaste, everyone. I'm Mehek from Chamber of Chartered Professionals, and I would like to welcome you all to the fourth and the last day of this series, which is a certificate course on income tax organized by Chamber of Chartered Professionals and hosted by Asian Economic Council. In this demeanor, I extend a very warm welcome to the speaker for today, CA Sachin Sinha ji, and the respected audience. I further extend my wishes to the Asian Economic Council team and our knowledge partners, Sankalp, Let's Share, Devalia, Value Square, and Profinomy. In the last 3 days, we went through various income tax topics, and today with the same enthusiasm, let us continue to devote our minds into today's topic, which is clause by clause analysis of Form 3CD. Before we start with today's webinar and hand over the mic to Sachin ji, so please allow me to give you a brief introduction. CA Sachin Sinha ji is a fellow member of ICAI since 2004. He's a partner of Prakash Sachin and Company, Chartered Accountants, having office at Connaught Place. He has in-hand experience of taxation, auditing, and management consultancy. He is also a member of study group of Direct Tax Committee and International Tax Committee of ICAI. He is special invitee in the study group of International Tax Committee of NIRC of ICAI. He's a member of Research Committee on International Taxation of NIRC of ICAI and also a visiting faculty at ICAI to deliberate on the subject of international taxation. He has already deliberated in around 250 webinars, and today, sir, we are pleased to have you on this platform for today's session. On to you, sir.
Thank you, Mac, for nice introduction. I'm very much thankful to Chamber of Chartered Professionals for giving me this opportunity, and also thankful to Asian Economic for co-hosting this program. I assume that this is the fourth day, ma'am?
Yes, sir. Fourth and the last day.
Okay. So today is last day, and the chance for batting is given to the talender. I don't know whether I would be able to justify as a talender or not, but the responsibility is very big that either you are in the tax team or you are in the audit team. The tax audit generally comes to you. And in small form where all the activities are being done by all the members or the article clerk of the office. So in that case, we can say that even the audit or the tax part comes to one person or group of persons. So considering this fact, we'll start our discussion relating to section 44AB, and then we'll move on to filing of form 3CA, 3CB, 3CD, and important provisions relating to these forms. So I want to keep this session very interactive, and I would love if I can get the answer from the participants, because I have few questions for you, which I have prepared some case studies, and I would like to get some answers from you so that I can understand that yes, you are also listening to the session, and of course, when we discuss the issues, the new things will come out. So, can I share my presentation?
Yes, sir.
So, is this visible?
It is. I guess the screen has blocked. No, it is visible now.
Great. So 44EB is very interesting section because keep on amendments are frequently there. Earlier, if you remember, I think 5 years back, there was little amendments was there in this section. However, this section was introduced in 1984, and from that time, the amount of the limit which is prescribed in section 44AB was almost freezed up to 40 lakhs, and then it increased to 60 lakh, then 1 crore, then 5 crore, 10 crore. I don't know what is the future now, but presently the limit is 10 crore. So we will discuss what are the situation when the audit will take place, what are the situation when the 10 crore is applicable. We will also discuss the issues of tax audit relating to 44 AD, 44 ADA, and other relevant provisions. So come to 44 AB. This section starts with every person. So this is important to understand the section or what the section is saying. It says every person carrying on business. So this section is majorly related to business. Carrying on business shall, if his total sales, turnover or gross asset, as the case may be, in business exceeds, in business means the business what they want to say in the first business, that is the same business, in business exceeds rupees 1 crore in any previous year. So this is the main basic line of this section. So if I can summarize this line, that the carrying on business and the total sales, turnover or gross asset exceeds rupees 1 crore in the previous year. Now it is important to understand that what is the meaning of business. So business is already defined. What is the meaning of sales, turnover or gross asset? So sales is not defined in this act. So let me put a question for you. Assuming the turnover of a proprietorship concern is 90 lakh rupees, and the sales tax or the GST part is 16 lakh on such 90 lakh. So total is 1 crore 6 lakhs. So whether in that case, whether the audit under section 44 AB is applicable or not. So any answer on this? So yes, no. Himanshu, Harish Kumar sir is saying yes. Kamlesh sir is saying no. So yes, no, yes, no. So it's a very simple question, and I think so. Turnover included GST. So Kalpesh sir is saying turnover included GST. So if we include GST, it means the turnover exceeds 1 crore rupees. So what is the threshold? The threshold is 1 crore. So when we say the turnover, so turnover means whether we include tax or not. If we include tax, then it is the auditable file. If it doesn't include tax, then it is not auditable file. So in this case, you have to take the decision that whether this is an auditable file or not. So before this, to take the decision, we have to understand what the loss is. Since, as I mentioned, that sales, turnover, or gross asset is not defined in the act. So from where we can take the meaning of this term? Because if you see the turnover as per Companies Act section 2 under bracket 91, it says the turnover means aggregate value of realization of amount made from the sale. So realization of amount made from the sale, supply or distribution. So sale, we can take it from here that yes, turnover means realization of amount made from sale, but that is from the perspective of Companies Act. So can we move on to Companies Act directly when my client is a proprietorship concerned, not a company? So in my view, this section, we cannot borrow the definition of turnover from the Companies Act if the SSA is not a company. Secondly, we have revenue as under section IC under ICDS. So ICDS talks about revenue. However, the term which is given in the section is sales, turnover or gross asset. So again, can we say that yes, sales, turnover or gross asset equals to revenue, or does it mean something else? So revenue is the gross inflow of cash, receivable or other consideration arising in the course of ordinary activities of the person. So we can see that yes, it also wants to tell something about sales, but since we are not aware that what is the exact meaning of sales, so it is very difficult to consider this definition for the purpose of our working, because it talks about revenue. We'll discuss this again when we come to the further slide. Now come to the guidance note, because this is important. What our guidance note is saying, because our institute is the main body which guides us about our working. So as per the guidance note, the sales turnover means the aggregate amount of which sales are effected or services rendered by an enterprise. So it again says the aggregate amount of which sales are effected and services are rendered. So we want to understand the meaning of sales. So aggregate amount of which sales are effected. So what is the meaning of sales? So again, it is not defining the sales. The term gross turnover or net turnover are sometimes used to distinguish the sale aggregate before or after deduction of returns or trade discounts. So again, what is the example I have given to you, that is 90 lakh or 106 lakhs, that is not forming part of this aggregate before and after the returns and deduction trade discounts, because in our example, the component is tax part and not the returns or trade discounts. So that is clear that what we will do about the return or trade discount, but it is important to understand. So what will be the treatment of tax? So this is interesting because of course, like we want to understand the meaning of sales. Similarly, so many the department also like in the example I have just given to you, that 90 lakh and 106 lakhs. So assuming the client filed a return considering the view that 90 lakh is my turnover. However, the department is of the view that 106 lakh is the turnover, and in that case the file is auditable, and the matter went to the tribunal and high court and the various courts. So, and how the court has interpreted this term. So the court says the word sales, turnover, gross receipts are commercial terms and they should be construed in the commercial sense and in accordance with the normal rules of accountancy. So this is very simple to understand. जो हम लोग नॉर्मल कोर्स में जिसको हम सेल्स बोलते हैं वही मेरा सेल्स है. नॉर्मल के कोर्स मींस इन द कमर्शियल टर्म्स जिसको हम बोलते हैं सेल्स, वही मेरा सेल्स है. अदरवाइज सेल्स का डेफिनेशन आपके लिए अलग होगा, मेरे लिए अलग होगा. तो कोर्ट ने ये बोला. Accordingly, turnover and gross receipt and means gross inflow of cash receivable. In the other judgment, the court says that it is well settled that the term sales, turnover, gross receipts have to be interpreted with reference to the item which go into profit and loss account. So it says that what is going to the profit and loss account. So if you are regularly maintaining the books of accounts on the inclusive method, that is the tax plus sales, then in your profit and loss account, that figure will go, that is 106 will go. Then 106 is turnover for you. In the other judgment, the Gromore expert says, neither the term goods nor turnover is defined in the Act. In general, turnover is meant to be sale proceeds of the goods sold. In other words, commercially, it would mean the amount of money turned over. So basically, in more or less in every judgment, they want to say that what the term means, what you generally understood in the commercial parlance, that will be considered for the purpose of turnover. तो जो आप कमर्शियल टर्म्स में जिसको आप यूज करते हैं इस टर्म्स को, वही आपका टर्नओवर होगा. So I can see that in the answer given by our various learned participants, I can say that all are correct. Either your answer is no or yes. The important thing is how you are maintaining your books of accounts. If you are maintaining your books of accounts on the inclusive method, then inclusive method will work. If you are maintaining your on exclusive method, then exclusive method will work. Now the interesting situation arises. Okay, so Umesh sir is saying the turnover does not include GST. Earlier, excise was part of turnover. So all these judgments what I have just referred, these are basically prior to ICDS. Now the ICDS is there, and now ICDS says for the purpose of revenue recognition, we will add all the taxes, duties, cess, whatever applicable there. So if considering this fact, it means the sales would be 106 and not 90. And ICDS is part of Income Tax Act. So we can see that yes, for the purpose of income tax, 106 would be the turnover. However, there are various codes which says that the turnover means all the sales, turnover, gross receipt means that however how we use this term in the commercial sense, this is the meaning of this terms. So that position will always sustain, and the department will never challenge this part, because if you maintain your books of accounts on inclusive method, then of course you will claim the tax part as your expenditure, and the difference, whatever you have not paid, is anyway forming part of 43B. So assuming take a simple example that 90 lakh is your turnover and 10 you are maintaining your account considering that GST is also part of turnover, so 106 your turnover. Now you will claim 16 lakh as an expenditure, whatever you paid to the department, assuming you paid 14 lakh or 12 lakh as the case may be. So in that case, the remaining amount would be considered for the purpose of 43B and it will be allowed whenever you pay. So this is the reason why taxes, which is not actually routed through the profit and loss account, even though that would be disallowed if you have not paid before filing of return. So 43B. So this is one part we have discussed. Now come to the second part. So this is 44AB clause A. There's a proviso inserted in this section, and that is in the year 2020 by the Finance Act 2020. And this term is very interesting. And by this, the limit of the tax audit earlier it was 1 crore, now it becomes 10 crore. So what is the term? Aggregate of all amount received, including amount received for sales, turnover, or gross received during the previous year in cash does not exceed 5%. So whatever amount you received during the previous year, if the cash component is less than 5 crore, you are eligible to take the benefit of this proviso clause. And so these two terms are the twin condition. These two has to be satisfied together. Aggregate of all amounts, all payment made, including amount incurred for expenditure, and that too 5%. So if the expenditure and the receipt, to aggregate of all expenditure and receipt, all payment or all receipt, if the cash component is less than 5%, then you are eligible to take the benefit of this proviso clause, and the turnover, and for the purpose of tax audit, the turnover limit would be 10 crore instead of 1 crore. However, for 2020, it was 5 crore, but subsequently in the Finance Act 2020, they increased this limit up to 10 crore. So with this, we can discuss some case studies. So around 14-15 case studies I have prepared, and I'd like to keep you more engaged in the discussion. I'll discuss one by one so that after lunch you'll not get a slip over there. Okay, so come to the next case study. The total sales during the financial year 2021 of Messrs. BBC Private Limited is 9 crore. Why 9 crore? Because we are assuming that the threshold is 10 crore. So we will test everything as per the limit of 10 crore. So turnover is 9 crore and foreign exchange fluctuation is 2 crore, which is shown in the P&L account as other income. So whether Mr. ABC Private Limited, Mrs. ABC Private Limited is liable for tax audit? Any answer on this? So Kamlesh sir is saying no. Okay. So far 3-4 answers I have received and majority is no. No, only business. Okay. Okay. So if the foreign exchange fluctuation is on account of your debtors receivable or creditors payable, or for any reason, assuming you have purchased some machinery and in that case there is some exchange fluctuation you got, or you have taken some loan and on that in that case also there is some exchange fluctuation is there. So you have to classify that whether this exchange fluctuation is in the nature of capital expenditure or revenue expenditure. If it is in the nature of revenue, capital item or revenue item. If it is in the nature of revenue item, then of course it will form part of the total receipt. So total sales turnover or gross asset. So whenever we calculate the foreign exchange fluctuation, if it is from the business, why from the business? Because if the debtors are there, then in that case, the total income will include the 9 lakh plus 2 lakh, and then we can say that yes, this case is auditable. If it is not from the if it is from the other anything else, assuming there is some interest on the interest for instance fluctuation on interest account, then in that case we can say that it is not forming part of business, so it will not consider it for the purpose of our turnover. Now, coming to the next question, whether your answer would be different if ABC Private Limited is a SEZ unit and claiming exemption under Section 10AA. Any answer on this? If it is a 10AA unit and the interest fluctuation is there and the income is 2 lakh rupees, then whether it would be forming part of total income or when we calculate turnover, we'll include it or not. So I am getting the answer. Shiv Ganesh sir is saying yes. Any other answer? Okay. So because as mentioned that this is relating to business and in case of export unit, they generally export the material and of course either there is foreign exchange fluctuation or gain or loss. So in that case that the credit amount would be the form part of total income. Now, if I change this question, what if during the financial year the foreign exchange loss is 1.5 crore, which is debited in the profit and loss account? So the presentation is 9 crore is turnover, 2 crore is the exchange fluctuation credit, and 1.5 crore is the debit. Then in that case, whether it is auditable or not. Any answer from the participants? No. Signesh sir is saying no. Any other answer? Because it is very important to understand that however you present, Nishant sir is also saying no. So since how we generally prepare our account in the foreign exchange fluctuation, there is a credit amount, debit amount, and the net balance will appear in the profit and loss account. If it is debit and at the expenditure side, and it is credit then in the income side. So in that case, the net income should be reflected in the profit and loss account and not the gross amount. So thank you so much, Nishant sir, Simran. And now coming to the next question. I'm very happy that you all are taking interest and participating in the Q&A session and discussing the case studies. So now come to the case study number 3. The total sales during the financial year 2021 of Mr. CBC Private Limited is 9 crore and loss of stock due to fire is 2 crore. Insurance company accepted the claim and compensated by paying 1.5 crore. Now the total is 9 crore sales and 1.5 crore insurance claim compensation. So whether this case is auditable or not. Any answer on this? Put your answer on chat box. Kamlesh sir is saying no. No. Okay. So since this claim is from the loss of stock due to fire, so it is part of operating income. Although for the purpose of financial presentation, you can say that this is non-operative income or whatever term you use for the purpose of preparation of financial statement. But for the tax purposes, it is your income because it is due to loss of stock. And since it is loss of stock, so it would be included in the total while calculating total turnover. So 9 crore plus 1.5 crore is 10.5 crore. Whether your answer will be different if there is loss of factory building of rupees 5 crore, out of which insurance company paid 3 crore. So 9 crore is the turnover and 3 crore is being paid by the insurance company. So total 12 crore, whether it is auditable or not. Any answer on this? Okay, factory then no. Okay, so majority is no. So I also want to go with the majority. The answer will be no, because since it is a factory building and the nature of it is capital nature, so it will not form part of total turnover. So while calculating turnover, it is not form part of total turnover. So in that case, this 3 crore not be calculated, not taken, should not be taken for calculating the turnover. So 9 crore will be there. So no audit. Okay. So coming to next case study. before this, just for you, for the purpose of discussion, since we have discussed this part, the aggregate of all amount received and the turnover 5 crore. So it is important to understand, since it says that 5 crore is the 10 crore is the limit. So in that case, what would be the situation? So since the proviso clause A consists of aggregate of all amount received, so it is important that all amount received means all amount, whether it is capital nature, whether it is other revenue nature, whether it is repayment of loan, whether it is whether it is receiving of loan or receiving of advances from the vendor. So based on this, let's come to the next case study. Case study number 4. So turnover of Mr. A in the financial year 2021, that is the previous year, is 7 crore. Is 7 crore. So what Siganesh sir is saying, what about GST input credit affected on turnover? So sir, for the purpose of GST input credit, the input credit and output tax liabilities, that is for the purpose of GST. For the purpose of accounting, of course, we consider the net sales. So net sales means other excluding GST, and this is the way we generally present our financial statement. But the ICDS says it should be on inclusive method. So it should, if it should be in inclusive method, then the taxes should be included on the turnover. But ICDS doesn't say. ICDS also say that this is not related to the preparation of financial statement. So while preparing the financial statement, we will take only the 90 lakhs and not the 106 lakhs. Yeah, and if it is a situation, then there is there are so many judgments which support our view that yes, we will take only the 90 lakh, because the turnover of the sales means what we generally understood or generally use in the commercial parlance. So now come to the next case study. Turnover of Mr. A for the financial year 2021 is 7 crore, out of which cash receipt is 70 lakh and receivable is 1 crore. He also gets a loan of 10 crore. So total turnover 7 crore का, 1 crore का रिसीवेबल है, तो रिसीविंग टोटल मेरी हो गई 6 crore और 10 crore का लोन भी मुझे मिला है. इस केस में 70 लाख का मेरा रिसीवेबल जो कैश ट्रांजेक्शन 70 लाख का है. इस केस में मैं 44AB का क्लॉज ए का प्रोवाइजो क्लॉज को अवेल कर सकता हूं या नहीं कर सकता हूं. Whether Mr. A is eligible for proviso clause of section 44AB clause A or not. Any answer on this? So Nishan sir is saying no. Not eligible to take the benefit, sir. Kamlesh sir is saying yes. So it is good that in all cases we are getting two views, and of course there can be only two views, either yes or no. So since if you see the example, 7 crore is the turnover, out of which 1 crore is not received, so which is debtors. So total receiving is 6 crore, and 70 lakhs is the cash component. So around 12 or 11.5% is there. However, during that year, the loan is taken from the bank of 10 crore. So total receiving is 6 crore plus 10 crore, so 16 crore. If you calculate the 5 crore, 5% of 16 crore, then it will be 80 lakhs. And the cash received is 70 lakhs. So this is allowed, and you are very much out of the provision. So you are within the provision, and you can claim the benefit of the proviso clause. And for you, the tax audit limit would be 10 crore and not 1 crore. Now come to the next question. Whether your answer would be different if the sales amount is 12 crore and the receivable is 3 crore, considering the other facts remain same. So sales amount is 12 crore and the receivable is 3 crore. So on received amount is 9 crore. In that case, what would be the situation? Assuming there is no loan in that year. So in that case, yes. Yes means he is eligible to take the benefit of the proviso clause. So Simran ma'am is saying yes. So Sai Ram sir is saying yes. Any other view on this? Kamlesh sir is saying no. Why turnover and loan being taken together? Okay, so no. So I'll answer your question, Ganesh sir. But before this, just let me explain this fact. So since in this case, the 12 crore is the turnover, which is more than 9 crore, in that case, we will not test that 5% criteria. That 5% criteria is applicable only when the turnover is less than 10 crore. If it is more than 10 crore, you're receiving maybe only 2 crore or 5 crore, remaining are the data. In that case, you are out of the limit and it is not required to be tested. Now come to the question of Shiv Ganesh, sir, why turnover and loan being taken together? Because the language of the section, if you can see, it says aggregate of all amount. It says aggregate of all amount received, including amount received from sales. So aggregate of all amount received. So the loan what you have received is also an amount. So that's why it is taken for the purpose of calculating of 5%. But that is only for the calculation of 5% and not for the purpose of calculation of turnover. Okay. So coming to next. What would be the position if the sales during the year is 9 crore and he also received 2 crore from the preceding year receivable, considering the other facts remain same. So in that case also, since 9 crore and the preceding year amount received for it may so happen the debtors realized for the preceding year. So in that case, sales is 9 crore. And if the loan is taken, then we will test including the loan, the limit, the 70 lakh is less than 5%. Come to next case study, that is number 5. So turnover of Mr. A in the financial year 2021 is rupees 7 crore, out of which cash received is 32 lakh. So this is very simple to understand. I have taken the situation that this turnover is 7 crore and 32 lakh is the cash received. And in this year, the 1 crore is the receivable. So the amount received is 6 crores, so we'll calculate 5% based on 6 crores, so 30 lakhs. So since it is exceeding 30 lakhs, so we can say that it is out, he is out of proviso clause. But in that year, what happened? Out of this 1 crore, one debtor was my creditor as well of rupees 50 lakh. So he 1 crore minus 50 lakh, he paid me 50 lakh and said your account is settled. Why so? Because I was also supposed to pay him. So on that basis, he settled my account and paid me 50 lakh. So in that case, how will calculate the threshold of 5%? Whether the amount which is adjusted by the book entry, whether that will also be calculated, taken forming part while calculating the 5% or not. So any answer on this? Yes. So yes, because the language of the section, I'll go with the majority. So the language of the section is amount. If you see the section is, so the turnover of groceries during the previous year in cash. So in cash, comma does not exceed 5%. So my uh, concern is only with the cash component. If it is other than cash, the account is settled by other means other than cash, then it is while calculating 5%, we can consider those parts also. Okay, so 4, 5 we have done. Come to next. The situation may also arise in case the advance received in the preceding year is relating to. So this is actually in this case what actually want to say, that whether the advance which is received for the sales which will take place in the future years, whether that will also be calculated. So yes, while calculating the receipt means all received, whether it is for the preceding year sales or for the future year sales, advance received, every amount what you have received, whether it is capital account, whether it is loan amount, anything. Now, I want to pose one question more before you. Since this section says that 5% is to be tested. So what would be the last day? For assuming, if you remember, there is section 44 AD, it says, the proviso clause says that if you receive the amount in bank from through the banking channel, we will allow you 6%, and that too, that amount is to be received up to the due date of filing of return as prescribed in section 139(5). So that is only in respect of 44 AD. While calculating the threshold in 44 AB, assuming during the year the sale amount is 5 crore, out of which 2 crore are received during the year and 3 crore is outstanding, which are received in the month of April or May subsequently, then in that case, how we will calculate? So whether on the basis on the 2 crore we have to calculate, or the amount what received subsequently, that will also be calculated while testing the 5%. So in that case, only the amount which is received during the year or paid during the year, that is to be considered, because this section says during the previous year. So during the previous year means previous year up to 31st March, whatever amount you have received, that is to be tested. So I think part A for section 44 AB clause A with proviso we have already done. If you have any question, we are ready to take it. Now come to next question. But before this, let me put a question before you. So Umesh sir has raised the hand. Mehak ma'am, can you please allow him to speak?
Sure, sir. Just a minute. I guess you've dropped the hand.
Okay. So coming to the next situation, let me pose a question before you. Assuming you have a client which is a contractor, and in case of contractor, accounting standard says that revenue is to be recognized based on the percentage of completion method. So this is for the purpose of accounting. While working for the tax calculation or the tax audit purpose, whether that percentage of completion method turnover is taken for the purpose of tax purpose also or not. So two situations. One is the turnover as per percentage of completion method is 12 crore. However, the real income is only 9 crore. In that case, whether in this situation, whether audit is required or not. Any answer on this? No. So Kamlesh sir is saying no. Any other view? The turnover as per percentage of completion method is 12 crore, and the turnover, the actual turn, so the real income is 9 crore. So Amit sir is also saying no. So I think the majority is with no. Okay. So before ICDS and post ICDS, the situation is different. Before ICDS, what was the situation? When we calculate the turnover of a contractor based on the percentage of completion method, we generally used to present our facts before the court that, see, I have prepared this financial statement. Why, as per percentage of completion method? It is because it is required as per the accounting standards. However, Income Tax Act doesn't say anything about how to recognize the revenue in case of contractors. So I'll go with the real income theory, and we will follow the real income concept. In the year 2016, they come up with the ICDS, and in ICDS in the revenue recognition, they said that in the revenue is to be recognized in case of contractor by percentage of completion method. So since ICDS is also part of Income Tax Act, so we can say that yes, it is right. So we are preparing our financial statement as per the accounting standard. Now we are supposed to calculate the tax liability based on the percentage of completion method. The story doesn't stop here. Then what happened? Subsequently, the Chamber of Tax Consultant filed an writ application, a writ petition before the Mumbai High Court, says that the whole procedure of the ICDS is invalid. It should be removed. Then in that year, in the same year, the department introduced new section, that is 43 CB, 43 capital C capital B, and this is that in case of contractor and service provider, the in the revenue is to be recognized based on the method, based on the percentage of completion method. So from then, uh, the calculation in case of contractor was the percentage of completion method for the purpose of books of accounts, accounting standard 7, and for the purpose of tax, for tax purposes, 43 CB is there. So we also calculate the turnover for the purpose of income tax and as per 43 CB. So hope I have made this provision clear. If there is any question, I am ready to take it. Now come to the next provision. So clause B. Clause B is very interesting. That is only, it says that carrying on profession. So the first one was carrying on business. The second is carrying on business, and that it says if the professional receipts is more than 50 lakhs. So if it is more than 50 lakh, then the tax audit is required. If it carrying on business, so C talks about carrying on business and such business is 44 AE, BB, BBB, then in that case, the AE, BB, BBB is majorly for is for the purpose of the presumptive taxation, and the presumptive income rate is given in that particular section. But assuming the assessor doesn't want to declare the profit as given in the particular section, and the assessor wants to declare the lower profit, then in that case, the audit is required as per the provision of section 44 AB. Come to next. So 44 D, then D clause is there. D clause says if you don't want to declare your profit as prescribed in 44 ADA, then in that case you have to come through the audit as per 44 AB. So 44 ADA says that if the gross asset is less than 50 lakhs and the assessor has to declare the profit of 50% while carrying on profession. If SSC doesn't want to declare the profit of 50%, then in that case, it says that okay, you come through the audit route. Now come to clause E. It is also very important. So carrying on business shall, if the provision, so this is again related to business, if the provision of section 44 AD clause 4 are applicable. So this is very important to discuss, because prior to 2017, the language of this clause was if you don't want to declare the profit in accordance with 44 AD clause 1, then you have to come with the audit. But now they have changed this part and now saying that carrying on the business shall, if the provisions of section 44 AD clause 4 are applicable. So it is important to understand what is 44 AD clause 4. So 44 AB and AD I have mentioned here, provided for section 44 AB. So this we will discuss. What is 44 AB? AD. As for 44 AD4, where an eligible assessor declares profit for the previous year in accordance with the provision of 44 AD, and he declares profit for any 5 assessment year relevant to previous year succeeding such previous year not in accordance with 44 AD1, he shall not be eligible to claim the benefit of 44 AD. So basically, if in the previous year you don't want to declare your profit as per provision of 44 AD clause 1, then for subsequent 5 years you are out of 44 AD and you cannot claim the benefit of 44 AD1. So assuming a situation that the turnover is 90 lakhs and which is less than 2 crore, because for the purpose of 44 AD eligible SSC eligible business and the turnover should be less than 2 crore. So 90 lakhs is the turnover and SSC can opt 44 AD and declare profit as per the provisions of 4480 clause 1, that is 8% or 6% as the case may be. Now he don't want to declare the profit as 8% and he want to declare the profit of 4%. In that case, whether his case is auditable, this case is auditable or not. So any answer on this? So let me put my question again. If the turnover is 90 lakh and the SSC doesn't want to declare the profit as per 44AD clause 1, then whether he has to go through the audit route or without audit, he can continue for the previous year. Any answer on this? Auditable. So Rajendra sir is saying auditable. 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 New idea not accepted. Auditable. Yes. So majority is with auditable, but this time I will not go with the majority. So the section is very simple and it says, if in the previous year you are not disclosing the profit as per 44AD clause 1, then for 5 assessment year relevant to previous year previous year succeeding to such previous year, not in accordance with the provision of 44AD, he shall not be eligible to claim the benefit of the provision of section 44AD for 5 subsequent years. So you are out of the provision of section 44AD for 5 subsequent years. But what about the position for the current year, for the previous year? Subsequent year I can accept, but what is the position of previous year? Because in the previous year my turnover is less than 1 crore, so I cannot fall under 44AB. My turnover is, but I don't, at the same time, I don't want to declare my profit as per 4480. In that case, previous year, you can declare your profit as whatever you want, but in that case, you have to maintain the books of account and declare the profit as per the book profit, or you can say that whatever the book says, so that you can justify the profit what you have calculated before the assessing officer. But the audit is not required in that year. Subsequent year, subsequent 5 year, even though your turnover is less than 1 crore, 2 crore, 5 crore, whatever the case may be, even though you want to declare the profit more than 8%, 12%, 15%, that is all immaterial. For 5 years, you compulsorily you have to go to 44AB and get your accounts audited. So with this, we can do 1 or 2 examples. Then we can come back and discuss more on this. So, case study number 8. An individual carrying on trading business of a small machinery which is used for the manufacturing company. So, he is basically a trader. When the turnover of such SSC for such business is 8 crore, he also satisfies the twin condition of the proviso clause. So, it is again for 44AB. I think this question. Okay. Case study number 10. So first year of business. So I'd like answer from the participants in this case study. This is the first year of business, that is 2021. The turnover is 150 lakhs and the profit declared is 8% or 6%. Whether SSC can apply 44AD? Any answer on this? So turnover is 150 lakhs. Yes. Okay. So SSC can opt for 4480 because he is declaring the profit for more than 8% or 6%. What if SSC declares profit less than 8% or 6%? Any answer? For question number 2, what if SSC declares profit less than 8% or 6%? Whether audit is required or not required? Then audit. Okay, so Sairam sir is saying then audit. Nishan sir is saying no audit. Tax audit is applicable. So Kamlesh is saying yes. Kamlesh is saying no. Priyank sir is saying yes, audit is required. Shivgani sir is saying then audit required. Okay. So if it is the first year of business and your turnover is 150 lakhs, if you want to declare a profit at a lesser percentage of it, less than 8% or 6%, in that case, you are falling under 44AB clause A. So clause A says if the turnover exceeds 1 crore, assuming you are not satisfying the twin condition of the proviso clause. In that case, audit is required because, but as per 44AD, sorry, 44AB clause A. Now come to the next question. Whether your answer would be different if the turnover for the previous year 2021 is only 95 lakhs. If the turnover is 95 lakh and the SSE want to declare the profit less than 8% or 6%, in that case, whether audit is required or not. Any answer on this? Okay. Okay. So your turnover is 95 lakhs and the percentage you want to declare is less than 8% or 6%. In that case, whether audit is required or not. So I'm getting the answer that yes, audit is required. Audit is okay. So since this is the first year of business and SSC wants to opt out from 44AD, in that case, for subsequent 5 years, he has to get his accounts audited. But for the previous year, he can go without audit. Okay. So come to next case study. Previous year 1890, profit declared as per 44 AD and file return accordingly. Previous year turnover, that is 1920, the turnover is 2.5 crore and tax audit done. Previous year 2021, turnover is less than 1 crore and SSC wants to declare profit as per 44 AD. Can he do so? So 1920, there was audit and he is out of 44 AD. For 2021, whether he can go for 44 AD or not, yes or no. So Pradeep sir is saying no, he cannot go for 44 AD. Any other answer on this? No, no, no. Okay. Okay. So majority is with no. But if you see, the question is the previous year 1920, the turnover was 2.5 crore. Since it was 2.5 crore, so anyway, he is not within the ambit of 44 AD. So 44 AD option was not available to him. So opting out from the 44 AD, no question arise because he was not, his turnover was more than 2 crore. In that case, 44 AD is available to him. If he is compulsorily out of 44 AD, then 44 AD is still available. If he is voluntarily or he opted out from the 44 AD, then in that case 44 AD will not be available for subsequent 5 years. Again, one more case study. More or less similar type case study, like 11 number. So previous year 1819 and the profit declared 44 AD as per and under the presumptive taxation. 1920 turnover was 1.5 crore and he opted for 44. So turnover was 1.5 crore and he opted out for 44 AD. Now that client comes to you, that is in 2021, and the turnover is less than 1 crore and the SSE wants to declare profit under 44 AD. Can he do so? So whether in 2021, can he opt for 44 AD? No, because in 1920, in the preceding year, since he has opted out from 44 AD, so for subsequent 5 years, he cannot avail 44 AD. Great. So one more question, whether you're enjoying the question, the case studies or not? Yes, no. Yes. Okay, great. Thank you so much. So up to 12 number we have already done. Now come to case study number 13. This is again interesting. An individual SSE carrying on business of ready-made garment 1. The second business is Ultratex, dealer of Ultratex cement on commission basis. And the third is petrol pump of wind and oil. And in each business, the turnover is 75 lakh. So total is 2.25 lakhs. So whether he is eligible to take the benefit of 44AD, so whether we will test for business wise or the pan wise, business wise or pan wise, pan wise. Okay. So while testing the business, then we say that it is totality of all business carried on by the SSC, But assuming the SSC is carrying on profession as well, then in that case, we'll test the profession. For professional, we'll test the criteria of 44 ADA, and for business, we can test the criteria of for the business only. So rightly said, business. But now the question arises: what if the aggregate of all business is 1.60 lakhs or 1.80 lakhs? So 60 lakhs is the turnover. Then in that case, whether he will be eligible to take 44 AD or not. 44 AD is available to him or not? Yes. So Pradeep sir is saying yes. Sai sir is saying yes. Okay. So 44 AD, while reading 44 AD, it says that if you are doing business on commission basis or if you are earning any commission, then 44 AD is not available. So in this case, since the SSC is carrying on business of Ultratech, dealer of Ultratech cement and getting commission on it, then in that case, it is not available. Okay. So I think up to we have already covered. Now come to two more important things. So 44 AB, AD versus AB, we have already discussed. If you see the language of the section, so if you see the language, because as I mentioned that prior to 2017, the situation was different. Post 17, the law, the amendment in this section 44 AB and proviso clause was inserted. Then what the language says, 44 AB clause C is majorly is saying that if you're carrying on business of 44 AB, BB, and you don't want to declare the profit as per the percentage prescribed in that particular section, in that case 44 AB clause C is available for the audit. In 44 AB, proviso clause inserted in 2017, and it says this section shall not apply to the person. So this section is not applied to the person who declares profit and gain for the previous year in accordance with the provision of section 44 AD1. So if you declare your profit as per the provision section 44 AD clause 1, then 44 AB is not available. But vice versa is not applicable. So if you doesn't declare your profit as per 44 AD1, then it doesn't mean that you have to get your accounts audited. For this, you have to go for 44 AD clause 4 and then come to 44 AB clause E. Okay. So since the section started with every person carrying on business, then profession, then again business, then again profession, then again business, then it says that get his accounts audited. So if you say that every person carrying on business having turnover more than 1 crore or 10 crore as the case may be, get his accounts audited. So this is very important to understand. Get his accounts audited of such previous year, audited by the accountant before the specified date and furnished by that date the report of such audit in the prescribed form duly signed and verified by such accountant and setting forth the particulars as may prescribe. This is very important section because this part of the section says that the accountant has to the accounts has to be audited by the accountant, and where the accountant is defined, that is in 288 explanation. And when we go to explanation to section 288, it says that 141 subsection 2 of the Companies Act, the auditor means that is given in that particular section. So that is not the subject of our debate. Now the term is get his accounts audited. So what is the meaning of accounts? Accounts means any document or any books or any piece of paper through which this can be calculated or worked out, that what is the transaction you can track, or the profit can be calculated, that we can say that yes, this is the account book through which the transaction can be recognized of such previous year audited by the accountant before the specified date. So what is the meaning of specified date? So explanation of that particular section says specified date means in relation to the accounts of the SSC of the previous year. In relation to the accounts of the SSC of the previous year relevant to the assessment year means 1 month prior to the date of furnishing of return on 139.1. So can I get the answer from the participant that what is the last date for filing of return if the tax audit is applicable in the case? What is the last date for filing a return if the tax audit is applicable in that case? Any answer on this? November 30th. If the tax audit is applicable, then 30th September is, I think 30th November is the date. If the tax audit is applicable, 30th November. Any other view? Because two answers I have got and there is two different answers. Now 30th November, 30th September. 30th September. So for this particular, for this year, Sairam sir is saying 31st October for return. 31st October. Okay. So assuming it is 31st October, but as per my knowledge, it is 30th November for filing of return, for filing of return where the tax audit is applicable. For filing of return where the tax audit is applicable, that is 30th November. And I think Swapnil sir is also supporting the same. Sairam sir is Amit sir is saying 30th, Shiv Ganesh sir is saying 30th November. So as per my knowledge, the return filing, the last date for filing of income tax return in case in a case where the audit, the tax audit is required, that is 30th November. So if the last date is 30th November, then what would be the 1 month prior to the date? Any answer? If the 30th November is the last date of filing of return, then what is the meaning of 30th November, 1 month prior to the due date? Any answer on this? 31st October. Okay. Agreed, sir. So specified date means 31st October. If specified date means 31st October, then my next question is, what is the last date for signing of return, so signing of tax audit report by the chartered accountant? Any answer on this? If 31st October is the specified date, what is the last date for filing of, for signing of tax audit report by the chartered accountant? 30th October, 31st October, 31st October. Okay. So again, two views, 30th October, 31st October. Any other views? So 31st October is the majority, but unfortunately, I don't want to go this time with the majority because the language of the section is before the specified date. So specified date is 31st October, then before the specified date is 30th October and not 31st October. So in case where the audit is required, the auditor's report, that is the tax audit report, is to be signed by the auditor on or before 30th October and not 31st October. The report can be furnished up to 31st October. Okay. This is again for the purpose of turnover determination. Mehak ma'am, up to what time I can continue?
Till 5:30.
Okay, up to
5:30.
5:30. Okay, okay. So I have around 90 minutes left with me, so I can discuss it more detail. So this we have discussed. Okay. So now the question arises: an individual SSC carrying on trading business of a small machinery which is used. The turnover of the such SSC for the from such business is 8 crore, he also satisfies the twin condition of the proviso clause. It means for this SSC, the turnover limit is 10 crore and not 1 crore. It means he is out of 44 AP up to 10 crore. Since he is not required to get his accounts audited, so how he will declare the profit, whether on the presumptive basis or as per the uh, books of accounts. So any answer? Yeah, as per BOA or presumptive? Any answer on this? Kamlesh sir is saying as per BOA. Okay. As per books. As per books. Okay. So presumptive taxation is not applicable in this case because this is not part of presumptive taxation. So as per books of accounts, whatever the profit is calculated, that is to be declared, because even you are out of the provision of tax audit, you are liable to maintain books of accounts, number one. Number two, this section is also applicable for the companies as well. However, the provision of 44 AD is not available for the companies. Is not available for the companies. So this we have done 1, 2, 3, 4. Okay. So now come to the forms, because this is again it will take around 60 minutes, and then we can, for the remaining 30 minutes we can take your questions. So form 3CA, 3CB as per rule 6G, because form 3CA, there are three forms: form 3CA, form 3CB, and then form 3CB. So form 3C and 3CB is applicable uh, as per the status of the SSC, and the conditions being are required to be satisfied. So assuming, as mentioned in this slide, in case of a person carrying on business or profession whose accounts are required to be audited under any other law, then in that case 3A is required. Name of the statutory if not same for tax audit. Okay, so 3CA. So can I get the answer on this question, that when 3CA is required? Let me put example before you. Assuming the company is incorporated on 15th of, yes, so Messrs ABC Private Limited is incorporated on 25th January 2021, and the turnover up to 31st March is 12 crore. So it is more than 10 crore. So no dispute about 44 applicability of 44 AB. Company did not get his accounts audited for the financial year 2021 and appointed you as tax auditor for 44 AB. In this case, whether 3CA is applicable or form 3CB is applicable. Any answer on this? Whether 3CA is applicable or 3CB is applicable? 3CB. So it is a private limited company and his accounts is required to be audited. Even in that case, 3CB is applicable. This is a company incorporated on 25th January and his accounts is required to be audited. 3CA is applicable. Okay. So I've got two answers. Raindra sir is saying 3CB and Sairam sir is saying 3CA. Both the answers are correct. Let me explain the fact. So if what does the rule says, that if your accounts is required to be audited, when audited it is not so, but generally when we prepare the tax audit report, we prepare either we file 3CA or 3CB. So in 3CA, in the case of company, we have to mention the name of the statutory auditor. Why this example we have chosen? Because 25th January, when the when the Companies Act says that in the first year you can audit for the 15-year period, and so for the statutory audit is required for the next year, that is 21-22. So after 31st March 2022, the accounts is required to be audited under the Companies Act. However, In the Income Tax Act, there is no such provision. And in this case, the previous year means whenever you started your business up to 31st of March or 1st April to 31st March. So in this case, business started on 25th January and up to 31st March, whatever turnover he has earned, that is 12 crore. If it is more than 10 crore, then that it is required to be audited for the purpose of tax audit is there. But since books of accounts is not audited under any law for the time being, it will be audited in the subsequent year. So at this time, we will append the report of 3CB and not 3CA. I hope I have made this clear. Now come to the second situation. Assuming there is a company which is a branch office of a foreign entity, the accounting period for such foreign entity is the calendar year, that is January to December. However, in India, we have the period of April to March. But the branch office which is in India doesn't want to follow the Indian accounting period, and they want to follow the accounting period of the parent company. That may be for the purpose of convenience, that the accounts is to be merged easily. So for the company, the branch office made the application before the MCA that we want to change the accounting period from April to March to January to December, and the Ministry of Corporate Affairs allowed. In this case, even though the account is required to be audited in the previous year by the auditor, but still we will choose 3CB in place of 3CA because the accounting period is different. The same is given in the notification number 561 dated 22nd of May 1990. Okay, so we have covered majorly 3CA, 3CB, and in all other cases where the account is not required to be audited, the 3CB is to be furnished. So can I get an answer from you that if the accounts is required to be audited under the GST audit, under the GST law, even in that case, whether we will file 3CA or 3CB? Any answer on this? Ranger sir, Sairam sir, Swapnil, any answer on this? So if your accounts is required to be audited under any other law, so GST is another law, and in that case, whether 3CA is applicable or 3CB is applicable. So Pradeep sir is saying from 2021 no GST audit. Okay. So 3CB only, because even though for the purpose of GST, yes, it is required to be audited, but that is not all financial part is not required to be audited. Only the transaction relating to sale, purchase, input tax credit, output tax credit, that is to be audited. And in other words, we can say that what 9C is a reconciliation statement or and not the auditor's report, or it is not required to be audited the whole financial statement. So in that case, the 3CB is applicable. So based on the audit report of GST audit, the 3CB is applicable and not 3CA. However, other conditions, if you satisfy other conditions like it is a company, then 3CA is applicable. So few important points relating to 3CA, 3CB, because we generally, while preparing form 3CA or 3CB, it covers true and correct view. However, in the financial statement, it covers true and fair view. So there is difference between true and correct and true and fair view. So if it is true and fair, we can say that we have audited this financial statement based on the sampling, some sampling we have done, and and based on such sampling, we have whatever we have observed, we have presented before the shareholders. But while preparing tax audit report, in that case, the correctness is to be certified by the auditor. And since correctness is to be certified by the auditor, we cannot say that we have done the audit on the sample basis. So in the tax audit, you have to verify each and every transaction, and then you can see that you have audited and whatever information is there, that is true and correct. Now come to important point that we have oftenly seen that in most of the cases, Form 3CD is there, and there are various points we generally use to mention, like the number of transactions are very huge, so we are unable to verify the transaction more than the payments more than 10,000 rupees. The TDS working is very voluminous, so we are unable to comment on the TDS provisions, or books of accounts are not properly maintained, so we are unable to comment on this. Stock records are maintained at the various places, so we are unable to comment on this. So these are the few points we generally see what is mentioned in the 3CB report. However, it should all be covered in the 3CA or 3CB as the case may be, and not in 3CD report, because the place which is provided to you for filing 3CA or 3CB, that is the place which is given for the purpose of your observation and reporting the irregularities, that is only in the Form 3C and 3CB, not in 3CD. 3CD is majorly the reporting part. Whatever the facts are there, just report it. So I have listed out some transactions or some information, or which we can say that these are the qualification or observation, like valuation of a stock is not possible, proper stock records are not maintained, records necessary to verify personal nature expenses not maintained. Try to put all the points, whatever related to your audit. Try to put all the points before in the face of the report, that is on 3C or 3CB, and please do not hesitate to report the transaction or report the irregularities, because if you're not reporting the same, or if you're not reporting the irregularities, it may so happen that the disciplinary action can be taken in this case. We have since we all are professional here, so we might have seen so many cases where the bank come to the auditor and say, since you have audited the books of accounts of the client, and you're saying that the stock is being maintained properly and all the stock records are there. However, as per the bank verification or the bank auditors, they are saying that there is no stock available at the godown, or there is no stock being maintained by the audit by the company. So try to avoid such type of things, which you can write everything or anything, whatever you have seen or whatever you have verified. But since you have not seen or not verified, please do not put as certified by the management, because based on the management certification, if you want to declare, if you want to say something, or if you are not giving your comment that the resources were limited, so you are unable to verify those transactions. Assuming some stock is lying in Sikkim, and you are auditor in Bangalore company, then you cannot say that I have visited to Sikkim for the purpose of verification of audit. In that case, you are relying on the work of another auditor, then it is okay. If you are relying on the certificate of the management, please be careful and please feel free to mention such type of issues on the face of the audit report, that is from 3C and 3CB. So these I have tried to put some important points. I'll share this presentation to the Chamber of Chartered Professionals. You can get it from there. Okay. So now come to next part, 3CD. I'll do this case study number 15, but I think we should keep this for the last part of discussion. Otherwise, we'll miss something which is important here. So now come to important points of 3CD report. This total number of points which is given in 3CD report is 1 to 44. However, up to in this up to 1 to 44, there are 2 points which is not required to be reported this year. So the total number is 1 to 42, and out of this 42 points, we will discuss the important points with you, and there are few amendments also in this case, so we will discuss all that part also. But if you have any other query on any other point which I am not taking for the purpose of discussion, please feel free to ask those questions as well. Okay, so come to Form 3CD. Before moving to Form 3CD, I want to put a question before you. Well, whenever we are preparing a tax audit report, whether it is for the business or for the SSC. Any answer on this? Whenever we prepare the tax audit report, whether it is for business or for SSC. So Kamlesh sir is saying business, Anil sir is saying business, I am saying SSC, SSC, business, SSC. So again, two views, business or SSC. So I think this time numbers are equal. For someone saying SSC and someone saying business. So I cannot go with both. So the 3CD report or the tax audit report is only for the business and not for the SSC. Why so? Section 44 AB says, in case of business, if the SSC, every person carrying on business get his accounts audited. Every person carrying on profession get his accounts audited. So either you are carrying a business or profession, your accounts is required to be audited only to that extent, to the extent of that business or that profession. Now come to next question. There may be some saving account and there is current account. All the transaction of the SSC is routed through the current account, but there are some other income which is in the saving account, but that is not routed through the books of accounts. So in that case, while preparing the 3CD report or while doing the audit, we will take only the current account or saving account or both. Any answer? Both. Okay. Any other answer on this? Both. Both. Kamlesh sir is saying both. Sriganesh sir is saying both. Okay. So since we are doing the, as discussed, that since we are doing the preparing the 3CD report for the business and not for the SSC, and assuming that SSC has some other saving account which is not related to business, and all the transactions in the saving account are not routed through the books of accounts of the SSC, in that case, we will not touch the saving account. We will focus only on the current account. However, for the purpose of return filing, we will take both the bank account and then we will prepare the return. Now come to the important points. Up to 1 to 8A is in part A, and then the remaining is in part B. So point number 4, whether the SSC is liable to pay indirect tax. So the language in the form is not indirect tax. It says that whether SSC is liable to pay taxes, the taxes as per, that is GST Act, custom, excise duty, etc., or any other indirect tax. So that is, so I have just summarized here that only indirect tax we are covering. If yes, furnish the registration number, identification number allotted to the same. Now, if you see this, since we are filing this information, okay, so Sai sir is saying then there will be mismatch, no between return and audit report. So, okay, sir, I can take your question at the last part of the session in last 30 minutes. And we'll discuss this question. So in this question number 4, if you see, they are asking whether the SSC is liable to pay direct tax. If yes, furnish the report. Now there is two situations we can visualize. One, the SSC is not liable to pay indirect tax, but he is registered under the GST. Then what would be the situation? If the SSC is liable to pay indirect tax, but he is not registered under the GST, then what would be the situation? Whether as a tax auditor, I am responsible to verify that whether he is liable for indirect tax or not, because it expands the scope of our working. That we have to, before while doing audit, we have to verify that whether the SSC is liable for tax audit or indirect tax or not. While determining so, we have, of course, we have to refer the relevant sections, relevant notification circular, whatever the information which is there, so that we can determine that whether he is liable to tax or not. But as per my understanding, as a tax auditor, we are not supposed to comment on this, that whether he is liable to pay tax or not. I think the question should be whether the SSC is registered under the GST or the custom or the excise act. If yes, furnish. I think that would be the more appropriate question rather than asking the question that whether he is liable to pay indirect tax or not. Assuming he is liable, but he is not registered. So in that case, if I say yes, then the drop down will open, but I have no number to put on the drop down. If the SSC is not liable to tax but registered, then I can say no, he's not liable to tax. Then the drop down will close, and then how I can put the numbers. So this is one of the situation. Coming to clause 8A, this is new for this year. So opted for taxation under the new regime. So if the SSC has opted for the taxation under the new regime, in this case, what will happen? While preparing, while furnishing this report, that is on 30th October, when signing the report, I am not in position to determine that whether his SSC will take the benefit of this section or not. It means so because he has time gap of 30 days for filing the return, and as per the provision of law, he can he can opt for this new tax regime up to the last date, that is up to the date of filing of return. So in that case, it may so happen that while preparing the statement, the tax audit report, he might have opted in or opted out from the 44A, 44 BA or BAV, and subsequently he decided to opt in or opt out. Then in that case, your report and the return will not match. Come to next important point, clause number 9. This clause basically asks that whether, if it is a firm, AOP or BOI, whether there is any change in profit sharing ratio. If yes, is there any change occurring during the previous year? If yes, change in remuneration not to be reported. So now try to understand, since there is change in profit sharing ratio, and from the year 2021 previous year, new section 9B and 45(4) inserted, and which says that if there is change in profit sharing ratio, then it will be considered as a reconstitution. If it is a reconstitution, then in that case, and if the partner might have received, the partner have received some either money or capital asset or stock in trade, then in that case, capital gain or business income would be calculated accordingly. So simply saying there is change in profit sharing ratio, yes or no, then we have to keep in mind that section 9B or section 45(4) may be triggered, and we have to calculate this liability for the purpose of our tax working. So clause 9 we have covered. Now come to clause number 10. So let me put some question before you. This is very simple question to reply, that nature of change in profession, nature of business or profession, if there is any change in the nature of business or profession, particulars of such change. So what exactly they want to ask? Let me put some question before you. Number 1, earlier the SSC was trader of gold, now trader of iron. Whether it is change in nature of business, yes or no? Any answer from the participants? No, it is not change in nature of business. Great. Any other view? So Kamlesh sir is saying no. Any other answer on this? No. Because what we generally understand it is if it is trading, earlier he was also doing trading, still he is doing trading either of gold or of jewelry or of cotton or of oil, it is immaterial. But as per my understanding, it is change in the nature of business or profession, because it doesn't say that trading all tradings are same business. So trading of shares, no, sorry, trading of oil, trading of cement, trading of iron, maybe it can be said that yes, there's change in nature of business. What is nature of business? So let's take another example. That earlier my client was used to purchase goods from India and sell within India. Now he is purchasing goods within India and selling outside India. Whether it is change in nature of business or not? Yes, no. No. Okay. Now let me ask another question. Earlier the client was into the trading of iron. Now he is into the wholesale of iron. Whether it is change in nature of business? Yes, no. Yes, no, no, yes. So again, so it is very important to test that what is the meaning of change in nature of business. Before this, you have to determine what is the nature of business and then decide what is the change in nature of business. Whether change in the product is change in nature of business. Whether change in the nature of business without changing the product is change in nature of business. So there are some questions which we should ask from ourselves while replying to the question of this answer. Come to the next point. This is very important. And we generally used to answer this question because whether books of accounts are prescribed under 44W. If yes, list of books of accounts. This is very simple. That if yes, then drop down will come. You have to select the books of accounts. In the second question, they are asking list of books of accounts maintained and address at which the books of accounts are kept. Now they are asking for the address of books of accounts are kept. Let's take a simple example. What would be the situation when the books of accounts are kept on cloud? How to answer this question? Whether do we need to mention the cloud address or something else? So any answer on this? If the client is maintaining the books of accounts on cloud and the server, okay, so either is saying server location, the place where the server is located, please repeat the nature of business and change. Okay, sir, we will discuss again, sir. Please note down all your queries. We'll discuss it again. Okay, so the important situation is if the books of accounts are maintained at the cloud, then you have to mention the address or the web link of the path of the cloud address, so that that too in this report you have to mention that in the detail that where the books of accounts are maintained and in which form. If it is maintained on cloud, please put the complete address of the cloud. Now take a situation. Assuming my client is at a place nearby, assuming in Bangalore, my client is placed in Bangalore. His business is Bangalore, and he is maintaining all the books of accounts in Bangalore. But his registered office is in Hyderabad. His registered office of the MCA registered place is in Hyderabad. In that case, if you put then you have to put the address that books of accounts are maintained at Hyderabad. If you are not putting the address of Hyderabad, then the Ministry of Corporate Affairs will definitely send a notice to you that why you are not maintaining the books of account at the registered place as mentioned in the Companies Act. So to avoid this situation, you have to to take a permission from the Ministry of Corporate Affairs and by way of making an application to the MCA that you want to maintain your books of account at the different location other than the registered place of business. If you are not doing so, please be mindful that 50%, 50,000 is the penalty for this non-compliance and under the Ministry of Corporate MC Act, under the Companies Act. Okay, so method of accounting is very important. Method of accounting employed during the year, question number 13. Can different method of accounting employed for different business of the same SSA? Any answer on this? Can different? Okay, so Kamlesh sir, you have a question. Mahek ma'am, can you please allow him to ask the question?
Sorry, sir, I didn't get you.
Kamlesh sir has some question. So can you please allow him to ask the question?
Mr. Umlesh.
Mr. Kamlesh Joshi.
Mr. Kamlesh, please, can you please turn on your mic?
Yes, Kamlesh sir, please ask the question.
Hello.
Yes, Kamlesh sir.
My question is, we are maintaining the data on the cloud, and the server is a Microsoft server, which is not in India.
Okay.
Then what should we fill in this ROC data? When we fill the MGT9 and UOC9, the data is maintained on cloud, and which is we don't know the place of the server even. It is through Microsoft. That is what we know. Microsoft doesn't have any official offices in India.
So you have, in this case, you have to just put the path of the cloud address.
We did that. The system is asking the address of the office.
Address of the office of whom?
The server, the place where the server is kept.
Okay. So in that case, if you know that where the server is located,
no, we do not know.
Okay. So generally, generally they are not sharing. The service provider is not sharing the information that where they are maintaining this server. In that case, if you have invoice of that service provider, then the registered office address you can put on the on that address.
Okay, registered office.
Yes, sir.
Okay, thanks a lot. Thank you.
Thank you, sir. So coming to the next point, can a different method of accounting for the different business can be taken? For assuming I have two business. For one, I want to maintain cash basis, and for second business, I want to maintain accounting accrual method. Is it possible? Yes, no? Any answer on this? Yes. So dual method is possible. Okay, so no. For company, no. Agreed. For company, it is not possible because company is maintenance of account. For the company is basically driven by the Companies Act and not by the income tax provisions. However, for income tax provision, 145A is there. So it says that for different business, different method of accounting can be adopted. Okay. So again, come to the important point, that is clause number 13, effect of ICDS. So generally, we have seen that while preparing the 3CD report, most of the professionals are not putting this detail, assuming there is no impact of this ICDS. But please know that in generally in 100% case, the reporting under this section would be there because first of all, the revenue. Since we earlier we have discussed that revenue for the purpose of accounting, we are maintaining the books of accounts as per the procedure what we are following regularly or as per the Companies Act. Then in that case, we are not taking the taxes part or the indirect tax part. That is we are taking on the net basis. So, but for the purpose of ICDS, we have to take on the gross basis, and the difference would be there, that is to be reported, number one. The second is closing stock. So for closing stock also, we are we are maintaining the closing stock. We are reporting the closing stock as per accounting standard 2, that is as per the cost or net realizable value, whichever is lower, and then we put that value on this. However, the ICDS says that the cost should include all the taxes which is paid, even though it is subsequently it is realizable from the government, that is to be mentioned. So in that case, the difference in case of stock as reported in the books and stock as per the ICDS will be different. And there are other particulars also, but generally these two items would be there. Okay. So now come to next point. Particulars of capital asset converted into stock and trade. This is very simple to discuss. But the second point which I want to discuss with you, that what about the stock and trade converted into capital asset? Whether this needs to be taken care of or not? Any answer on this? Capital as stock and trade converted into capital asset, whether this needs to be taken care of or not? Any answer? Yes. Yes. So for the purpose of tax audit reporting, the question they are asking that whether the capital asset is converted into stock and trade, then the answer is very simple. Now, the situation is, we change the situation saying that whether the stock and trade converted into capital asset, in that case, 28 clause 6A inserted in 2019 or 18 somewhere, then they are saying that even though there is stock and trade which is converted into capital asset, that will form part of section 28, and that is to be taxed under the head business. So how to tax it? In that case, we have to take while calculating the sale consideration would be the fair market value on the date on which it is converted or treated as capital asset. So what is fair market value? That is defined in section 222 capital A, and also the method of doing the valuation, calculating the fair market value is given in rule 11Q and 11QA. Coming to next point. This is again very important and very widely debated amongst the professionals, that assuming I have I received employee contribution during the previous year, what would be the position? So the moment you receive the employee contribution, it becomes your income as per section 224, and after making payment, it is allowed as deduction. If you fail to make the payment, then it will continue as your income. But section 36(1)(5) says, if you will not make the payment within the due date as given in the respective act, then the deduction would not be allowed and never be allowed. So 43B is not applicable in this case, and there are various judgment of the various high courts, and of course the divergent views are there. So to avoid such litigation, in the Finance Act 2021, department said that okay, we will put explanation on this, and they said it is hereby clarified that. So it's a clarificatory provision. It is hereby clarified that the provisions of this section will continue as it is. So the due date which is mentioned in the section will remain same, and it is never be not part of 43B, and it was never part of 43B. So in that case, 43B is not applicable. So even if you make the payment delay by if you're making payment delay by 1 day, then it is disallowed and it will never be allowed. However, there's one judgment which has come recently, and that is after the enactment of this provision, and that too in the favor of SSE. Now the litigation point is, after this clarification, since it is clarification, so the effective date of this clarification should be from the date when this section comes into force. However, they said that this is effective. So this clarification is effective from 1st April 2021. So now the question arises: what if the SSE has already made the delay payment in the preceding year? Whether it is allowed? So what would be the position prior to 2021? Of course, the intention of the legislature was not to make it effective from the 1st April 2021. It should be effective from the date when it comes into force. But unfortunately, they have mentioned in the footnote that this section is effective. This clarification is effective from 1st April 2021. So it may so happen that the professionals will take the benefit of this ambiguity, and they can approach to the court, and they can say that it should be allowed prior to 2021. They should be allowed. However, as per my understanding, it should always be allowed, even though it is paid after the due date, because the intention was not to keep the money with the employer, and the employer was not to enrich himself with this money. There may be genuine reason also. Assuming 15th August was the last day, but 15th August is a holiday. So in that case, the 16th August will become the due date. So whether system is equipped to take that 16th August as the due date, number one. Number two, if you have given the instruction to the bank to make the payment on 14th, but unfortunately the bank server was not working, so they made this payment on 16th or 17th somewhere. However, the sufficient balance was there in your account. So in that case, it cannot be said that you are not intended to make the payment, because any default, anything which is beyond your control, and the default is by reason of such things, then in that case, it cannot be said that you should be treated as SSC, you should be treated as defaulter in this case, because you have already did what was supposed to do from your side. If the bank fails to do so, bank fails to remit the money by any reason, then in that case, it cannot be said that you have defaulted. And that too, the sufficient balance was there in the bank account. Personal nature expenses. This is again a very important, because generally what happened, the SME client or the small client, the account is being maintained by the accountant. They generally used to take the details of credit card or put the expenditure without analyzing whether it is personal in nature or not. They just put the expenditure just to assure that the bank should be reconciled. If it is so, as the auditor, it is our responsibility to verify and identify that whether any profit, whether any personal nature expenditure has been debited in it or not. Number one. Number two, while doing so, please verify that is there any expenditure made by credit card, and the TDS should be applicable on such payment which is paid without tax. So that is again to be tested. The third thing which is important nowadays, while the client generally used to visit the site of Facebook or YouTube or other social media site to boost the product. They just get the mail from these sites like Facebook or WhatsApp or LinkedIn. They just put the login, put the product on it, make the payment by the credit card or debit card, and complete the transaction. If it is so. Nowadays, this transaction is covered under the equalization levy. And if you fail to deduct the equalization levy and make payment to the government account, then in that case, section disallowance under section 40A IB is there, and that too 100% and not 30%. So in that case, please be very, very careful that the expenditure should not be passed without very proper verification, even the transaction is made through credit card. Payment to specified person, the list of specified person is given. So in that case, just you have to mention that who are the specified person. And if any payment is made, just mention the name and just mention the nature of specified person and the amount paid to them. Here you are not to allow or disallow anything, whether it is reasonable or excessive or not, that is immaterial for us. We just need to mention the amount, the nature of payment, the amount, and the specified person. Now let me put a question before you. Whether a subsidiary company of a company, whether the subsidiary company of a holding company is related, is a specified person or not. Whether subsidiary company of a holding company is specified person or not. Yes, no. So Sairam sir is saying no. Kamlesh sir is saying yes, no, yes, yes, no. Again, two views with us. See, while testing whether it is specified person or not, the list is given in 48(2)(b). If you see, the subsidiary company is not in that list. If the directors are common, then the situation will be different. But if the company is a holding company, it's a natural person. So if the company is subsidiary, the holding company is there who holds the shares of subsidiary company, in that case, they are not a specified person. It may so happen that they are associated enterprise, but they are not specified person for the purpose of section 48. Specified person, expenses allowable on payment basis. So 43B, that is again a very good section. And whenever we make the payment, some payments are allowed, some transactions are allowed on, some expenditure are allowed on payment basis and not on booking basis. So this is a list. Okay, and the clause C of this section 43B says that assuming you have taken a loan, of say rupees 1 crore, and the interest on such loan is 10 lakh rupees, which is outstanding on 31st March or 28th March. Before 31st March, you discussed with the banker and you said that, okay, convert it into loan and then I'll make the payment. So the banker converted such interest amount to the loan amount and rescheduled the payment. Then in that case, whether the interest expenditure which is debited in the profit and loss account will be allowed to you or not. Any answer on this? So Kamlesh sir is saying yes. So I'm repeating my question. Assuming there is a loan of 1 crore and interest is 10 lakh on 15th of March or 20th of March, you approach to your banker and you said that just convert this interest portion to my loan amount and reschedule it. I'll make the payment accordingly. So now interest payable account is not appearing in the balance sheet. Now the loan increases from that particular amount. So whether the interest what you have debited in the profit and loss account, it would be allowed or not. So yes, no. No. So Sairam sir is saying no. Kamlesh sir is saying yes. Okay. So again, two views. So I'll go with this time. I want to go with Sairam sir because this is not the payment, because this expenditure is allowable on payment basis. However, You have not made the payment. What you have done, you have just simply converted such interest payable amount to the loan amount. So it is not paid. So this will not be allowed. Now take a situation when the company to fails to make the interest payment, company given the debenture to settle such loan and said, okay, you can just redeem this debenture or you can continue with it. You can and the interest the interest what is there. I just made the payment by way of this debenture. So in that case, whether this should be allowed or not. So in the recent judgment of Madras High Court in the case of Technologies Limited, the Madras High Court says that it is not allowed. However, the Supreme Court subsequently said that this is allowed, and because in this case the SSC has paid the debenture which is redeemable in the market. So in that case, it is, and while redeeming it will fetch the same value on which it is issued. So it will be assumed that yes, it is paid to the banking company. Okay, so come to next point. Secondary adjustment. This is again a very important issue because most of us might be doing the tax and the transfer pricing also. So the secondary, if there is primary adjustment, the section 92C says that you have to do the secondary adjustment also. So while doing so, assuming I am the statutory or I am the tax auditor of the entity, and Sairam sir is the transfer pricing auditor. Generally, the transfer pricing audit takes place in the month of November somewhere. Reason being, the data is not uploaded on the data bank. So we generally used to conduct such audit in the month of November. However, for the last date for uploading or furnishing the tax audit report is 30th November or 30th October. In that case, if as a tax auditor, if I comment on this particular point, that because what they are asking whether primary adjustment to transfer price is referred to in 92C has been made, as how I can see that the primary adjustment is there or not, secondary adjustment is there or not, because it is the tax auditor, whose responsibility is to audit audit for the tax purpose and not for the transfer pricing. The transfer pricing auditor is saying whether if there is a primary adjustment or not. So I think this point should be removed from tax audit report and it should be put in the transfer pricing report. If the transfer pricing auditor and the tax auditor are the same person, then that will be reported in the 3CEB. If they are different person, then in that case also it should be reported from 3CB. I don't know why this point they want to ask from the tax auditor if the tax auditor is not the transfer pricing auditor. Similarly, 94B reporting, they are also asking GAR provisions. Although this provision is applicable from 31st March 2022, from the next year. So because they have extended this for another 1 year, as per my understanding, because what this section or this provision says, whether the SSC has entered into impermissible avoidance agreement as referred to in section 96. Generally, it is not possible by the auditor to comment on this, because unless it is a very clear-cut transaction which is impermissible, the auditor won't be in the position to report this point, because if auditor says no, it is not an impermissible transaction, and subsequently the department after verifying all the documents come to the conclusion that yes, it is an impermissible transaction, that what would be the position of the auditor who is saying it is not impermissible transaction. Number one. Number two, what if it is vice versa, that the auditor is saying yes, it is an impermissible transaction, but whether the AO can rely on the judgment or the opinion or the wordings mentioned by the tax auditor that yes, it is an impermissible transaction. They have to do your exercise by their own, and then if they come to the conclusion that okay, it is not an impermissible transaction, then what would be the situation? So I think this should not, this point should not form part of tax audit report, because with these points like guard provisions, like transfer pricing, secondary adjustment, you are expanding, the government is expanding the scope, and from the tax auditor, while they want the opinion on the transaction. However, the tax auditor's responsibility is to report on the transaction and not to give the opinion on such transaction which is not the within the ambit, or the auditor is not able to comment on this, because it is every time it is not possible for the auditor to go through to into such information which is not available to us. Now come to clause number 31. This is again an interesting position. Here, since we have already discussed, we have all know that 269 SS, 269T. 269 ST is a very interesting position, because 269 ST is majorly related to the transaction in respect of, so it is one single transaction or the or occasion or the event. So if assuming you are receiving something which is more than 2 lakh, and that too without an account pay check or bank draft, then this is to be reported. Now let me put a question before you. Assuming I have taken a loan of rupees 5 lakh from Mr. Sairam, and now I am unable to repay this amount, and I am saying that okay, I'll just take my stock, so that that loan should be completed, that the repayment of loan should be completed. In that case, whether that transaction is to be reported in this particular clause or not. Any answer on this? So Kamlesh sir is saying, okay. So any answer on this? Yes, so it is to be reported. Any other view? Sairam sir is saying yes, it is to be reported. Any other view? Yes, it is to be reported. So yes, because okay, Pradeep sir is saying no, it is not to be reported. So majority is yes. So I'll go with the majority, because the language of the section is the receipt otherwise than by an account pay check or account pay bank draft. So if it is other than account pay bank, other than by account pay check or account pay bank draft, then it should be reported. Now the question arises whether this transaction is to be reported in 269 SS or 269T. Any answer on this? 269 SS or 269T? To 269 SS or 269 ST? Whether this transaction is to be reported under 269 SS or 269 ST. Any answer on this? SS or ST? Or both? No answer? Okay. So this clause is saying single transaction. So if loan is a single transaction and you are making payment of such loan, so in case of receiver, I am receiving any payment which is otherwise than by an account pay check or account pay bank draft, that should be reported. However, 626 SS says if there is any loan which is being repaid, or if there is any loan which is paid otherwise than by an account pay check, then in that case it is to be check or bank draft or any other mode, then it is to be reported. So any other mode means any other electronic mode. So then it is to be reported. Then in that case, it is to be reported in both the case. Now the interesting situation is there, because sometime what happened, the expenditure incurred for the purpose of in the personal nature, assuming for the marriage function, which is not related to business, so no question of reporting in the business part. But in case of receiver, the receiver is doing his business. So assuming you booked a banquet hall of rupees 3 lakh, and the person who is taking the service, who is making the payment of 3 lakh by cash, then in that case, of course, the payer is not liable to report anywhere because he is out of the ambit of tax audit, and that too is the personal nature. But the receiver is carrying on his business, so that is to be reported by the receiver. Assuming the payer is carrying on business and making this payment by way of cash, then in that case, of course, 40A3 would apply, and this expenditure would be disallowed. Take another situation that he has made 25 payments of 10,000 on various dates. So 40 is very much within the clause of 40A3. So expenditure would not be disallowed. But since it is related to one event or one occasion, in that situation, the receiver has to report this, and that is to be that as per section 269 ST. So both the parties, whether it is a receiver or payer, although this section is applicable in the hands of receiver, but this form says that the payer should also report on this transaction. So this is 4 clause which is to be reported. This is relating to DDS provisions, that is 34. Deemed variant. Details regarding turnover gross of the previous year, preceding previous year. So 145. Okay. Now come to another interesting point, that is clause number 41. Details of demand raised or refund issued during the previous. The provision says that details of demand raised or refund issued. Now take a simple example. The officer passed the order on 28th March, and the order received by the SSC on 15th April, and the refund credited in the SSC account on 5th May. Then which previous year is to be reported? Whether, assuming 28th March 2020 is the date when the order is passed, but the credit come to the SSC's account on 5th May 2020. 5th May 2020, then in which year is to be reported, whether 1920 or 2021? Any answer on this? Whether it is to be reported in 1920 or 2021? So, date of credit. However, Sairam sir is saying 1920 when the order is passed by the officer. Any other view? If you see as far as concerned to the demand, the refund issued by the department, there's always a gap of some timeline, because it is not credited to your account on the same day when the order is passed. And it may so happen that the order is passed, but the credit has not come to your account, and subsequently, by any reason, the order is reversed. So if you report it on the basis of order passed by the officer, then the situation would be different, because the language says the refund issued. So what is the meaning of refund issued? When it is credited to my account, then I can say that refund issued. However, there may be a situation where on 28th March, the order is passed or the refund is issued, that is, they have made the payment, but due to some bank approval, it is credited to your account on 3rd of April. Then whether the refund issued, because refund issued on 28th March and the credit is credited to your account on 3rd April. So which year is relevant? Because the sections, because the clause says that the refund issued during the previous year. So if we go with the issued, It is issued on 28th March. However, unless it is received to us, we cannot say that it is received. Then it can be the position that we can take this as a default issued in the year in which it come to us. So clause number 42, that is again important, relating to 61A filing of SFT forms, that is specified financial transaction. There are, as per rule 114 capitally, there are around 11, 12 items, but generally 2 points are relevant for us. If the accounts are auditable under 44 AP and the SSC has received any sum which is more than 2 lakh, that is to be reported, that too in cash, that is to be reported. And the second, if you have issued the shares of 10 lakh or more. So in that case, whether your file is auditable or not, that is immaterial. If you have issued the shares in that and that too more than 10 lakh, in that case, that is to be reported. And this that generally the due date for reporting this SFT is 31st May. So come to the next point, that whether we can revise the tax audit report or not. Yes or no. Whether the tax audit report can be revised, yes, no. No. Kamlesh sir is saying no. Sairam sir is saying yes. Yes. Anil sir is saying yes. Any other view? So yes, no, no, yes. Okay. So rightly said no, because generally we cannot revise the tax audit report. However, notification number 28/2021 issued on 1st April 2021, it says that you can revise the tax audit report, but that is only in 2 situations where the revision is allowed. Just see the second clause. This revision, that is the report, tax audit report, the revision is allowed where there is disallowance under section 40. So assuming 40 AIA, where you have deducted the tax, do not deposit to the government account. In that case, you should deposit it after 31st March, but before filing of return, it is allowed. Now the time gap is there because we are conducting or furnishing the audit report on 30th of October. However, the return filing date is 30th of November. So within these 30 days, if the SSC made the payment, in that case, it should be allowed. Because 43B says so. So if it is to be allowed, then the audit report is to be revised accordingly. And subsequently, the second section is 43B. And the SSC has paid the sum, that is any other item which is in the list of 43B and which is allowed on the payment basis, and the SSC has made the payment after tax audit report, but before filing of return, then in that case it is to be allowed. So that now such expenditure is allowable to the SSC, and such revision is necessary for recalculation of disallowance under 40 and 40B. Any revision in any other situation is not allowed. So this is only 2 situations when it is allowed, otherwise it is not allowed. So both the answers given by the respective participants, yes, no, correct. Come to the last part, last but not the least. If the SSC fails to get his accounts audited, of course, penalty is there under section 271B. Now take a situation. The turnover of the SSC is from one business is 15 crore. The turnover from one business is 15 crore and the second business is 70 lakhs. SSC gets his accounts audited for first business and failed to file the prescribed form within the due date. So for first business, that is for 15 crore, he has completed everything, he has done everything. But for second business, where the 70 lakh was a turnover, he missed to do this respective compliance. In that case, the assessing officer say that, okay, since you have not complied, put the penalty, invoke the penalty on 15 crore 70 lakhs. So what is your view? whether the penalty should be on 15 crore 70 lakhs or 15 crore or on only 70 lakhs. Any answer on this? 15, 70 or 70? 70. Amit Mangla sir is saying 70. Any other view on this? Penalty corrections and same. Okay. Any other view? 70. Okay. Okay, so majority is with 70. So I'll go with the majority. Because in this case, what happened? The assessing officer said that no, since you have not reported it properly, so the penalty should be on the whole amount. However, the Delhi tribunal said that in the case of Bharti Sharma, that no, since the 70 lakh is the amount on which the compliance has not been done, so on the 70 lakhs, you can invoke the penalty and not on the whole amount. So I think we have come to the end of our session. Thank you so much. If you have any query, I am ready to take it. Mehak ma'am, are you there? Hello?
Yes, sir.
Okay. So from my side, I have already covered. If there is any query, I'm ready to take it.
Okay, so I think you've been going through the comment section side by side, and there's a question in the Q&A. Have you gone through that too?
Okay, so I think I have already covered all the questions. Just let me take one question, sir. I could not understand case study 5 about net off. Okay. Okay, Sairam sir, I'll just take it. And Kamlesh sir is saying if the turnover is less than 50 lakh and profit is less than 5%, audit is compulsory. Okay. So come to the last question first. In case of Kamlesh sir, you want to say that if the turnover is less than 50 lakh, whether it is if for the professional or other or for business. Okay. So if you're carrying on business and the turnover is less than 1 crore. So in your case, you have taken less than 50 lakhs, profit is less than 5 lakh, then tax audit is not required if it is the first year of opting out from 4480. If this is the first year and you don't want to declare the profit as per the provision of 4480, then you can do so without auditing. But subsequently, you have to compulsory go for audit under the provision of section 4480 clause 4. Okay, sir. Coming to next question. Not opting 4480. So if you're not opting 4480, that's why I'm saying that if it is the first year and if you're not opting 4480, no issue. Subsequent year, you have to go for tax audit. If it is not the first year and it means you have already opted out from the 4480, in that case, subsequently you have to go for audit. Right, sir? Have carry forward loss. Not first year, carry forward loss. Okay. So if you have carry forward loss, then 44 AD is not available. If it is not first year, then 44 AD is not available to you. The remaining provisions of the act will continue as it is. Sir, I could not understand case of 5, study number 5 for net off. So, sir, let's take a simple example. Assuming my turnover is 5 crore and I have a debtor of 1 crore, which is my creditor of 50 lakhs. So I am supposed to make the payment of 50 lakh to him and getting 1 crore from him. So he netted off the amount and made the 50 lakh rupees, made the payment of 50 lakh rupees to me. In that case, what happened while calculating the 5% quantum for the purpose of proviso clause of 44AB clause A, then in that case, we will consider that amount which is netted off and not received to me by way of cash or bank for the purpose of 5% calculation. because the language of the section says in cash. So comma, in cash, again comma, then the in cash. If it is not in cash and it is settled by any other means or by an account, by accounting entry, then in that case we can say that yes, the payment is made and that is not in cash. So while calculating 5%, we will take this transaction. Okay, I think I have covered this. Few points I think pending. Please please repeat the nature of business and change. So while discussing the change, please explain the nature of business. Is if also mention the change in, if there is any change in nature of business. So we generally understand that while a person is selling gold on the trader of gold and now he become wholesaler of gold, we say that there is change in nature of business. However, the product is same. Assuming he is trader of gold earlier and he become now trader of iron, then we are saying that there is no change of business because in both the case he is doing the trading business. So my submission on this point is, if there is any change by virtue of which the profit ratio can be changed, the NP ratio can be changed, then these all are changed and that should be reported. Because while you're selecting your file for the purpose of scrutiny, it is based on the percentage of the profit of last 2-3 years and the current year. They will compare and then will pick the file. So it is important to mention that yes, earlier the SSC was in trading business and this year it becomes the wholesaler of the particular product. Then in that case, the profit ratio is changed. In 44, Sainam sir is saying in 44 AD, there is a point as the sequential limit should exceed for audit. Can I know what it means? So basic, if you see, let's take a simple example. My turnover is 30 lakhs. Even though I declare my profit at a rate of 8%, it will come to 2.4 lakhs. So I am below the taxable limit. So in that case, this section is not applicable. But if my turnover is 60-70 lakhs and I declare profit at a rate of 8%, then in that case, I am very much within the more than the taxable limit. In that case, this section is applicable. For calculating 5%, loan will be considered, but it will not be more than 10 crore. For calculating 5%, loan will be considered, but it will not be more than. So, sir, while calculating 5%, the threshold that the turnover should be within 10 crore. If it is more than 10 crore, then there's no question of over doing the exercise of 5%. If it is within 10 crore, then we will test by applying 5% that whether I am within the ambit of the proviso clause or not. If not, if the proviso clause is not applicable to me, that is my expenditure or receipt in cash is more than 5%, in that case, the limit is 1 crore for a purpose of tax audit. Otherwise, if I satisfy both these two conditions, then in that case, the limit would be 10 crore. We discuss about considering receipts in saving account and current account. Can you explain about this? Okay. So, sir, while since we have already discussed that while preparing the tax audit report or doing the tax audit, that is only for the purpose of business and not for the SSC. So it may so happen that SSC has some other income by way of other sources. Might be maybe interest is there, maybe rental income is there. That is not part of business. And that is appearing in the that is coming through the saving account and not in the business account. So in that case, we will not do the audit of such account and verify that is there any other income or not. Whether assuming the SSC has made the insurance paid the insurance premium from the saving account. So again, it is not routed to the business account. So not while reporting clause for the purpose of deduction details, we will not put that detail. What if the business receipt only coming in saving account in some cases? If the business account, if the business receipts is coming in the saving account, then of course it is part of your business, and then it should be reported in the tax audit report. Then it cannot be said that that this account is not related to my business. But generally, what happened? The businessman maintains the book, the account in the current account for the purpose of business, and for the saving account is for the purpose of his personal transaction. So any other question?
So there's one question in the Q&A box.
Okay, just hold on. Even though not related to today's topic, partnership firm converted into private limited company. In converted private limited company balance sheet, share premium, partnership capital balance account is there. No receipt of share premium. Whether 5627B would be attracted. So, sir, 5627B is applicable while issuing share on premium by the private limited company. Of course, you might have, while issuing the shares under of the private limited company, you might have done the valuation that whether whatever shares you are giving to the respective partner, that is as per the fair market value or not. If it is lower than if it is higher than the fair market value, then of course 5627B may attract in this case. What is the business? Okay, I think Mahak ma'am, I think I have already covered all the questions. Or my email ID or phone number is there. If there is any question subsequently, then you can share the question with me and definitely answer those questions.
So shall we end with today's webinar then?
From my side, I think yes, but you can ask with the participants as well.
So because I also don't see any more questions coming in. So thank you for the wonderful session, sir. It was indeed a very interactive session. With this, we come to the end of day 4 of the certificate course on income tax and the series as a whole. I would like to take this moment to thank all our speakers, CA Sangram Agarwal ji, CA Abhishek Jain ji, CA Anshul Kumar Singhal ji, Dr. Ravi Gupta, and CA Sachin Sinha ji. It was the deep knowledge of all the speakers that made this course more interactive. I would also like to thank all the participants for joining us in the last 4 consecutive days and being the completing piece of the puzzle. I would further like to thank the host, Asian Economic Council, and our knowledge partners, Sankalp, Let's Share, Devalia, Value Square, and Profinomy. Thank you, sir.
Thank you so much, ma'am. Thank you to all. Thank you.